Afternoon, everyone. I want to thank everybody for joining us this afternoon for our committee's bipartisan virtual forum on business interruption insurance. I especially want to thank the panelists for being with us here today. On March 11th, the World Health Organization declared the outbreak of COVID-19 a global pandemic. As the virus spread across the country, many state and local governments issued stay-at-home orders and forced the closure of many different kinds of businesses in order to mitigate the spread. As a result, small businesses operating in retail, food service, hospitality, and many other industries have virtually ground to a halt. Knowing that the future is uncertain and that many outside factors such as natural disasters may force a business to close for extended periods of time, small business owners purchased business interruption insurance to guard against precisely this kind of uncertainty. However, in recent weeks, insurance companies have begun informing their policyholders that their business interruption insurance policies do not cover pandemics, frustrating many of these holders. Many small business owners and others are wondering why coverage is being denied for business interruption if it does not cover situations like the shutdown caused by the spread of COVID-19. Although some of these contracts may explicitly exclude losses resulting from pandemics, most insurers are still denying coronavirus-related claims, even if they do not have those exceptions in those policies. We've heard many insurers argue that business interruption insurance only covers physical damage to the property. Some small businesses have decided to litigate the issue in the courts, but that might take years to resolve, costing these small businesses time and money that they do not have. We must always keep in the front of our minds that most small businesses, especially startups and micro businesses, do not have a team of lawyers on staff. Yet often the exclusions and exceptions contained within a business interruption policy are buried in the fine print. After years of paying their premiums on time and now having their claims denied, many small businesses are left wondering what they've paid for and continue to pay for these policies despite ongoing closures. Whether it's years of costly litigation or more likely denial of coverage on a BI claim by a small business, it is an unacceptable outcome, as either would only exacerbate the losses and unsustainable costs small businesses are facing because of COVID-19. At a time when millions of small businesses are struggling to stay afloat, the unemployment rate is at levels not seen since the Great Depression. And our healthcare workers, in particular, are on the front lines battling the spread of this virus. We must all do our part to fight this health and economic crisis. Therefore, it's incumbent on Congress, especially this committee, to work with affected policyholders and interested stakeholders to chart the appropriate path forward. That we are mindful that this is actually a complicated issue. There's a lot of very difficult dynamics at play. That's one of the reasons we wanted to convene this forum, so we can start to flesh out those issues and start having that conversation. But the alternative, where we don't have this discussion, where small businesses don't get any relief, resulting in permanent closure of many businesses, already we're seeing many of those permanent closures, is just unacceptable. So I look forward to hearing from our distinguished panelists today about the challenges these policyholders are facing, the challenges of the insurance industry and their perspectives as well as some of the potential solutions that are being discussed. Again, I want to thank the panelists for joining us here today, and I now yield to the ranking member, Mr. Balderson, for his opening statement.
Good afternoon, Chairman, and good morning to you. I guess it's still before noon out there in Colorado. So, hey, thank you for putting this together. Since the month of March, COVID-19 has swept across our country with a fury that is unrivaled in our modern history. As a way to respond to this pandemic, states have restricted activities and limited businesses' operations. Unfortunately, small businesses have been forced to close, causing an economic freefall. To combat this downturn, Congress and this administration have worked to create multiple relief packages to assist individuals, employees, and businesses. Just over the last handful of days, states have turned their attention to recovery and preparing plans to reopen. As the nation looks to recover, so will small businesses that populate the main streets of America. This committee has a long record of creating an environment where small businesses, entrepreneurs, and startups can succeed, providing our nation's jobs creators with the resources required to climb out of this pandemic and instrumental to the entire country's economy. The subcommittee forum today will explore one of the topics that has been in the headlines over the last few weeks and months. Specifically, how does the role of insurance operate within and during a pandemic that has caused and is causing such economic harm? Like me, many members of Congress have spoken to hundreds of small businesses that have deeply impacted by this crisis. The topic of business interruption insurance has come up often in many of these conversations. I'm looking forward to having a comprehensive conversation on this topic today. Businesses in my state of Ohio are struggling. I know that I am not alone in saying that we need to help them return to normal operations as quickly as possible. However, we must do this in a safe, prudent, and fair manner. I want to thank the chairman for gathering us today, and I especially want to thank all the panelists, also with Chairman Crow. Thank you very much, Mr. Chairman. I yield back.
Thank you, Mr. Balderston. Appreciate the opening statement. So I want to take a moment to just explain how this forum is going to proceed. Each panelist will have 5 minutes to provide a statement, and each committee member will receive 5 minutes for questions. So please ensure that your microphone is on. I'm guilty of this too. Often I'll get into my speech and have a great start and realize that I've been muted. So nobody's immune from the mute button. So please make sure that your button is off as you begin to talk, and that you're situated appropriately. And also please ensure that you turn your microphone off when you're done. And I will do the same so you don't have to hear my dog barking in the background. So with that being said, I'd like to thank our panelists for taking time out of their busy schedules to join us. So with us today, we have Chris Morrow, owner of Northshire Bookstore located in Manchester Center, Vermont, and Saratoga Springs, New York. Francisco Schlotterbeck, CEO of Maya Cinemas in Pasadena, California. Mark Shaker, the co-founder of Stanley Marketplace in Aurora, Colorado, actually just about a mile from my home. So I know Mark and the Stanley Marketplace quite well. And John Hodeling, the second managing partner of Guthier Murphy and Hodeling LLC in Metairie, Louisiana. Also Sean Kavalingen, President and CEO, Insurance Information Institute in New York, New York. Apologies, Sean, if I butchered your last name. And thank you all for being here. So I want to begin by recognizing Mr. Morrow for 5 minutes.
Okay, thank you very much for having me. Good afternoon. As you said, my name is Chris Morrow. I run 2 bookstores with combined 2019 annual sales of around $7 million, and I employ about 45 people. My stores are in 2 different states, New York and Vermont, and are separate legal entities, so I carry different insurance policies for each store with different local insurance agencies and different national insurance companies doing the underwriting. I have long carried business interruption insurance, but fortunately have never had the need to use it. As soon as I was shut down by COVID, I inquired as if my policies would cover the shutdown. My claims for both stores were rejected, citing language in the policies. There were virus exclusions and the need for physical harm to the buildings. Honestly, given the length of the policies, the arcane language, and my substantial workload, I had never really read the policies fully. I try to mitigate my risk as much as possible as a business owner, but the insurance companies are clearly much better at that. My New York store has been completely shut down for 2 months with a loss of almost $400,000 in sales, over 99% decline since 2019. We just opened yesterday for curbside pickup orders. My Vermont store was also closed for almost 2 months, but we were able to maintain curbside delivery and internet fulfillment during that time. In that store, we're down 32%, almost $140,000. So between the 2 stores, my sales loss since the closure is north of $538,000. For a small family business, that is impossible to overcome without help. It sure would have been nice if my business interruption insurance policies covered my business interruption. A pandemic is an insurable risk and has been modeled and reinsured in the past. When one occurs, it is likely to result in a total cessation of business. However, as the insurance companies are staying far away from this liability, Congress must take action by contemplating a solution to provide business protection against future pandemic risk, which some anticipate could come as early as this fall due to a resurgence of the COVID-19 virus. Perhaps a public-private partnership of some sort would make sense. I am not an expert in any of that, and we'll leave that to you to structure a good solution. I just want to take a second to talk about the Paycheck Protection Program, because this was partly designed to mitigate the impact of business interruption. It's a well-intentioned effort to address these hardships. Unlike many in the country, I had a very good initial experience. I applied on the first day and had my money not long after for both stores, different banks, different processes, and it worked very smoothly. The application was concise and easy to understand. However, there's clearly some problems with it. It was very narrowly focused on just keeping people employed for 2 months. It was not about keeping my business healthy and viable for the longer term, a byproduct of which would be continued and stable employment for my staff. The 8-week period to spend the money is too short. The 75-25 split is too restrictive. The IRS letting us know a month into this program that the expenses paid for by the PPP would not be able to be deducted as a normal business expense changed the whole dynamic of the program to make it unappealing and against the intent of Congress, as I understand it. I would not have taken the loan in my New York location if I had known this tax implication. And finally, the lack of clarity on specific important aspects of the forgiveness parameters and the slowness in getting clarification from the SBA has been frustrating while I'm trying to make business decisions on a daily basis with people's jobs at stake. All of this is to say that it would be prudent and greatly appreciated if Congress acts proactively to come up with a business interruption mitigation scheme that is timely, comprehensive, and takes into account the on-the-ground realities of keeping a business going in a time of crisis, so that the next time there is something like this, hopefully not in the near future, Congress is prepared in advance and businesses know what to expect. That is my opening statement. Thank you very much for your time.
Thank you, Mr. Morrow, for sharing that, and thank you for staying exactly on time, too. We appreciate your attention to that and look forward to hearing more about your story. Mr. Schlotterbeck, you are now recognized for 5 minutes.
Thank you. Hello, everyone. Good afternoon, Chairman Crow and ranking members, Balderson, and members of the committee. So my name is Francisco Schlotterbeck. I'm the CEO of Maya Cinemas, based here in California, in Pasadena, in the 27th Congressional District. Thank you for the opportunity to speak on behalf of my fellow movie theater owners and share my experience with Maya Cinema business interruption insurance claim. First, let me tell you a little bit about Maya Cinemas and the crisis we and other movie theaters are currently facing. Maya Cinemas was founded in 2001 with the mission of bringing the movie-going experience to underserved Latino communities. We own and operate 6 cinemas in California and Nevada and employ over 400 people, over 70% of whom are Latinos. Maya Cinemas welcomes 3.5 million guests to our theaters annually to share the experience of seeing a movie theater on the big screen. We are a minority-owned business committed to bringing our unique brand and culture sensibilities now and for years to come to these underserved Latino communities that absolutely love going to the movies as a family. Unfortunately, we now find ourselves in an unattainable financial position that threatens us as a terrible prospect of having to close maybe our doors forever. The movie theater industry is now completely shuttered and as severely distressed as possible due to this pandemic. We closed our cinemas in mid-March to comply with orders from Governor Newsom in California and Governor Sisolak in Nevada. Overnight, we went from having a strong box office ticket sales to having zero revenue. Not only are the movie theater industry current difficulties extremes, but its recovery will be really difficult due to this unique structure of our market. To break even, much less making a profit, we will require a steady supply of new movies, as you know. Without new movies, we simply cannot draw the minimal audience levels necessary to justify the cost of being open. The industry does not expect any new films until late July this year. Moreover, even when we do reopen, we will be subject to the capacity limit. Of course, we will comply with all the prudent measures to reopen safely, but doing so will continue to suppress our revenues, which will have a long-term impact in our company and the rest of the movie theaters. One of the first steps we took after we were subject to disclosure orders was to file a claim with our insurer for business interruption coverage. Prior to COVID crisis, we had purchased 3 policies that could provide coverage to us in the event of any cessation of our business operation of the kind we're currently experiencing. Specifically, we purchased business income coverage, civil authority coverage, and ingress or egress coverage. Our policy was paid in full when the pandemic started, and we have continued to pay our necessary premiums, despite not receiving a single payout. But claims under all 3 of our policies were denied by our insurer. First, business income coverage should have been triggered when our operations were suspended, because we did not report direct physical loss or damage. However, our insurance concluded that this coverage did not apply. Second, civil authority coverage should have been triggered when access to the area around our property was prohibited by civil authority. Our insurers denied civil authority coverage as well for the following reasons. One, it deemed we could not satisfy the condition that there was damage done to the property. Second, it concluded that any potential damage was not caused by a qualifying reason. And third, it found that the governmental order shutting down our theater wasn't due to physical damage. And third, ingress or egress coverage should have been triggered when ingress or egress to our property was prevented. Our insurer also denied that coverage because the prevention of ingress or egress was not due to direct physical loss or damage by cause specifically enumerated in our policy. Furthermore, the insurer denied our claim because even if we had sustained direct physical loss or damage to our property, the loss would have been caused by a non-qualifying reason, including a virus or a government act. These exclusions are extremely common in business interruption insurance policies, and it is virtually impossible to negotiate this exclusion with insurers. The world and our country have already felt the terrible impact of this pandemic on so many levels. The failure of our movie theaters would be an irreparable loss to the social, culture, and economic fabric of our lives. We stand ready to work with the Congress on preventing the loss of movie theaters and ensuring our industry's survival, and to find solutions that will prevent other long-term damage to our economy and our society as a result of this pandemic. Thank you for considering the needs of the movie theaters and all other severely distressed industry. I conclude here. Thank you very much.
Thank you, Mr. Schlotterbeck. Appreciate you sharing your story. Mr. Shaker, you are now recognized for 5 minutes.
Good afternoon, Mr. Chairman. Mr. Balderson, thank you for your time. My name is Mark Shaker. I'm the owner of Stanley Marketplace. Stanley Marketplace is a urban marketplace in Northwest Aurora, comprised of 56 all local independent businesses. Way back when, Stanley Marketplace was the ejection seat manufacturing facility adjacent to the former Stapleton Airport in Denver. And as the airport moved to the Denver International Airport, the whole Northwest area of Aurora became dilapidated and left behind. Our building sat vacant for 8 years before we came and resurrected it and turned it into a thriving metropolis of small businesses. Within that, we have 56 small, local, independent businesses. We opened our doors 3.5 years ago. It's the epitome of a small business sort of story. It was put together by neighbors that lived in the area trying to find a community gathering spot, took ideas from New York and San Francisco and other places between, and tried to bring something to Northwest Aurora that would revitalize an economy, revitalize a neighborhood that had been left behind once the airport moved. Part of our requirements for our businesses was that every single one of them had to have business interruption coverage. We call it the family when a tenant signs a lease, and we'd have family meetings every week. We review policies with everyone. We would go through different best practices. This was 2 years before we opened our doors, and we continued that practice for 3 years after our doors opened, as far as ways to support one another. In the beginning of March, we could feel what was coming as far as our impending fate. We met regularly with the city of Aurora and the Tri-County Health Department to figure out what our next steps were in the case of the civil closure. And once we received notice from the city of Aurora, the head city manager and their deputies, we closed our doors. And it's been that way for over 2 months. We are slated to open at the end of this month, but in the interim, we put together a cheat sheet for all of our businesses. They include how to apply for PPP funds, how to apply for EIDL funds, how to apply for different City of Aurora grants, and then also making sure that they all tried to activate their business interruption coverage. As we did that, we continued meeting virtually with all of our businesses and found ways to go. We are small-time landlords, so we are not some big entity, and we let everyone know that we're going to go through this journey, linking our arms and finding a way that we can kind of get through the other side. But everyone was going to feel some pain, but our goal was to find a way for every business to succeed. And as we've gone through that journey, we've all had to make negotiated settlements with all of our creditors. Us as landlords, we gave 2 months free rent to all of our tenants, and then we went to a straight percentage of sales through the end of the year. And we kept telling everyone our goal is to bring everybody back. We need to find a way that we're going to bring everyone back and for these small businesses to succeed. In the meantime, everyone applied for their business interruption coverage, and all 56 claims were denied. They represented every imaginable insurance carrier. Some of them had specific virus policy in there, and some of them did not. But in any case, every one of them was denied. And now we're in a situation where we've gone through great lengths to find sacrifices for all of our tenants. We've gone to our lenders and our creditors and said, you guys need to find ways to help support us as we get out of this. We've come up with virtual platforms. We started our own TV network, StanleyMarketplace.tv. We're about ready to open it's called the Backyard at Stanley. We're going to have football-sized tents as we try to bring the marketplace outside. About 15 of our businesses are doing curbside at about 40% of their total volume. And the rest of our businesses are finding ways to do either curbside, virtual opportunities, and looking at ways that we can get through to the other side. So we've continued brainstorming and using our innovative hats as far as finding ways that we can get through this. But in the meantime, we're all buried. The PPP, as I think Chris mentioned very eloquently, has been helpful, but has its limitations. But we have retailers that are sitting on inventory they can't move. It's a season out of date. All of our restaurants are essentially opening new restaurants. Their working capital is gone as they've tried to take care of all of their employees. They sat on inventory they couldn't move. And now they're in a place where they have to open at 25 to 50% capacity, which just does not work for anyone that is familiar with the food and beverage industry. So we are searching our heads. We're trying to find ways that we can get through on this. It's disappointing that every one of our claims has been denied. This is exactly why we made all of our businesses take this kind of coverage for things that are unforeseen as we mitigate our risks. But we're problem solvers. So we're here to try to figure out and maybe propose or be a part of any particular legislation or answer to any of these questions that we're posing that can help not just myself, but all the other folks that are on this line. So I appreciate the time and thank you for allowing me to share my piece.
Thank you, Mr. Shaker. Appreciate your time and for doing all the things you're doing to try to get through this. Mr. Hodeling, you are recognized for 5 minutes.
Thank you. I'd like to thank the committee for the opportunity to speak to one of the most important challenges facing American businesses in modern history. I'm General Counsel of the Business Interruption Group, the acronym BIG, a nonprofit of nearly 3,000 companies and business associations across America in every state, including the New York Times Alliance, the New York Hospitality Alliance, the Independent Restaurant Coalition, the National Independent Venue Association, the James Beard Foundation, and nonprofit sectors with members such as the Simon Wiesenthal Center. We are nonpartisan. American business owners come from every party, in every town. If you're an American worker, chances are you work for a business that has taken out some of its profit every year and paid it to an insurance company for payroll expenses, in part during a civil authority shutdown. American businesses expected protection on the eve of these shutdowns. For many of them, there was no exclusion for pandemic or viruses. The proverbial lifeboat was paid for. And yet, when American businesses made claims on these policies, they have been uniformly denied, regardless of the property language. Millions are now on unemployment lines, and many American businesses now face bankruptcy. The insurance industry has offered several reasons for the denials. They repeat the refrain that policies do not cover pandemics. They say all policies have virus exclusion or pandemic exclusion. This is simply not true. Not all policies have exclusions. Some actually have virus inclusion coverage. In others, the word virus or pandemic does not even appear in the policies as an exclusion. Insurance companies, however, are uniformly denying the policies no matter what the policies say. Prior to the shutdown, the insurance industry knew that many of these policies did not have virus exclusions that they put into policies following the SARS incident in 2003. Instead of preparing to pay these policies, they prepared a defense. They argued that for coverage to apply, a civil authority shutdown must be because of a dangerous property condition and covered loss in the area of the shutdown. So what insurers did is they proactively went out to agents and brokers, and they said that the civil authority shutdowns that were about to come were only going to be about social distancing, that they weren't going to at all have to do with a dangerous property condition, which was a covered loss in the area, which triggered coverage. They ignored the warnings and the reality that we were hearing from civil authorities that COVID-19 sticks on surfaces. It causes a dangerous property condition and loss, that the cleanup of this triggers civil authority coverage under the policies. They show charts now that they don't have enough money to pay these policies. Well, American businesses are also facing a problem of not having enough money, but they know that one's ability to pay doesn't impact the duty. The insurers claim that they don't have enough money because they point to $800 billion in claims reserves to demonstrate their solvency. They don't mention their reinsurance or the fact that they've reinsured these policies. Insurers and American businesses are at odds about what the policies will say. The insurance will draw on claims reserves now to pay lawyers to defend these policies in the largest civil litigation battle in human history. Both sides will argue case law. The insurers will win some of these battles and American businesses will win others. And insurers will spend billions defending the claims as American businesses will. If we do nothing, if we leave the battle in the hands of lawyers, American businesses will fail. In one sector alone, the restaurant industry, 4 out of 5 businesses will go bankrupt. Now, several proposals don't work. We side with the industry. We don't believe that retroactively changing policies to knock out exclusions is constitutional workable. We also stand with the industry that class actions or ideas that are more for lawyers than for individual rights of business owners is not the answer. But today we need a big compromise. We need a win-win, and we offer one to the committee. We propose an optional program for the insurers. Allow insurers to voluntarily opt into a federal program. If the word virus appears in an exclusion, the carriers can voluntarily pay those policies in exchange for federal reimbursement. This program will work. It will avoid the litigation costs. It will avoid us and people like me litigating over the ashes of these businesses. So I thank you very much. Thank you for the time.
Thank you, Mr. Hodeling. Mr. Kevlin, am I pronouncing that properly? Is it
Yeah, that one's good.
Okay, that one I've improved.
No, I appreciate it, and I have no pride in pronunciation.
Yep, you are recognized for 5 minutes.
Well, thank you, Chairman Crow and Ranking Member Balderson and esteemed members of the Innovation and Workforce Development Subcommittee. On behalf of the Insurance Information Institute, or III, I appreciate the invitation and the opportunity to speak before the committee on behalf of America's property and casualty insurers and reinsurers. For some brief background, III is a 60-year-old nonprofit organization that was founded by the insurance industry with the intent of informing and empowering the customer. We are a trusted source of objective, data-driven insights that help customers understand how to manage risk. We don't directly lobby, nor do we sell insurance through the III. Insurance has a proud 350-year history of supporting innovation and prosperity for Americans, individuals, businesses, communities. The industry is there to help Americans recover. We like to consider ourselves financial first responders when those catastrophes, those covered catastrophes happen, such as a hurricane or a tornado or a wildfire. With each of these, the insurance industry works with urgency, and we make sure that we're settling and paying claims. The fact is there are always going to be disputes with claims, but in the end, 99% of claims are paid. The shock of COVID-19 has obviously devastated the U.S. economy. And understandably, Americans are seeking solutions so that we can create more financial security in this time of uncertainty, and we want to get the economy up and running. And while the industry is eagerly working to provide the solutions that it can, we also need to be mindful that there are limits. In particular, an event like a global pandemic is uninsurable. Unlike typical catastrophe, where it's limited to terms of geography and time, and as an example, you can use 9/11, where for the most part, the two economies in New York and Washington, D.C. had the heaviest impact. What you're looking at right now is all of our economies in the U.S. and many throughout the world are all being impacted all at the same time. And given this unpredictability and really unimaginable potential for loss, insurance is simply unable to underwrite or cover a pandemic like COVID-19. This concept is expressly clear in standard business interruption policies. We reviewed and accepted by regulators. We work hand in hand to make sure that even so far as the type size is regulated in the right way and standardized. So in order to provide more clarity as well, I think we need to step back and understand what we're talking about in terms of property and business insurance. It is meant to cover various physical risks that would jeopardize or force a closing, and that would include a fire or tornado. Congressman from Colorado, hail would also be a good example of that. And when these unfortunate events happen, insurance customers can and should make a claim. Business interruption policies are offered as an add-on to the general policy to cover loss and income, continuing expenses. If you're closed, then you can have those expenses if you're being repaired or need to rebuild. But this is all from circumstances that involve direct physical damage. Also important to note, only about a third of U.S. small businesses actually choose to have business interruption coverage. So understanding that the industry is heavily regulated, these policies are approved by regulators. And I would draw your attention to statements by the likes of the National Association of Insurance Commissioners that have made it quite clear that business interruption policies were not designed or priced to provide coverage against a communicable disease such as COVID-19, and therefore there are exclusions in standard and typical policies. I'm encouraged to hear the thoughts about retroactively paying these claims. Simply one, retroactively payment or redesigning a contract is unconstitutional, and that's clear in Article 1. But it would also imperil the industry's ability to pay covered insurance claims filed by American homeowners, drivers, injured workers. One of the things that we just need to make clear is retroactive business interruption payouts would bankrupt insurance. We did a recent economic analysis. We determined this approach would decimate the industry's financial resources in a matter of months. I did hear and mention the industry surplus. Just to put that $800 billion in context, if you look back at the last 3 years and the claims that the industry has paid, it's equaled nearly $1.2 trillion. So the $800 billion seems like a large number, but when you're talking about increases in severity of catastrophes that are happening, and in fact have happened over 660% more since the 80s in terms of loss costs, you're looking at it. They sound like big numbers, but in fact, it's well designed for the industry to be able to pay claims and keep the promises that they've made to those customers that have paid premium. So we don't want to take those premium dollars away from where they're supposed to go. We know as well that the federal government is truly going to be the most effective way to originate a solution. It's the only entity that has the financial resources available to help businesses impacted by government mandated quarantines. So solutions, and I'm encouraged to hear again that we're talking about federal solutions, and we're encouraged as an industry to be a part of those discussions. And that's why the industry was part of more than 40 trade organizations coming together, restaurants, hospitalities, supporting a proposed federally financed program known as the COVID-19 Business and Employee Continuity Recovery Fund, to help better inform the public, the broader public.
So Mr. Kevlin, your time expired about a minute ago, so if you could wrap it up, I'd appreciate it.
Yeah, thank you very much. This is a time to come together and work toward recovering from this unimaginable and uninsurable catastrophe. The insurance industry is stepping up. It's paid back over $10 billion on auto insurance claims. We've contributed $220 million in charitable funds. And we look forward to having a fruitful discussion today, looking at forward-looking solutions. Thank you for your time.
Okay, thank you, Mr. Kevlin. I appreciate all that all of you shared with us today. I'm going to begin by recognizing myself for 5 minutes. So let me begin with Mr. Shaker. Mark, you talked in the beginning about some of the shared approach that you're taking to this issue. The fact that you are recognizing that we're all in this together, and you're trying to share the pain, frankly, with your tenants. And you're both a small business yourself, and you're a landlord to small businesses. So would like for you just to paint a picture very briefly, if you will, on the impact of your marketplace on the surrounding community and kind of the outsized role that the marketplace has played in reinvigorating our area of Colorado, number one. And then number two, there's been a lot of discussion here today about the physical damage element here. So from your perspective, as somebody that has both indoor and outdoor spaces, if you could shed some light on how you view this as a physical damage or hindrance to your business, and what you're doing to try to work around some of the physical restrictions on your business right now.
Sure, thank you. Stanley Marketplace has we've created about 560 jobs in a zip code that's one of the bottom 5 when we started, bottom 5 zip codes in the country as far as median income. And we've worked at finding ways that we are bringing all 4 sides of our project together. This pandemic came about pretty quickly as far as what we had to do as far as pivoting. The shared pain I mentioned, one thing that we've done, I talked about the free rent and the discount. We had to go to our lenders, and so we got 9 months of deferred payments on our loan, which is something that we're eating and we'll eventually have to pay back as far as debt once we are able to sort of get back on our payment plan. And we've looked at really hard with all of our creditors as far as finding ways to defer payments as much as possible. One of the frustrating elements is that while our banks have been kind, the SBA has paid 6 months of payments, not just deferred them, but made payments for all of our small businesses. But everyone is still paying full insurance premiums. It's the only line item across the board that we are still paying in full. It's been challenging because we have obviously frustrations that none of our claims were accepted, and we're still, while our doors are shuttered, businesses that were doing $200,000 to $500,000 a month have no revenue or borrowing funds, so they can do it. The PPP funds does not allow those summer payments for it. So, we are constantly trying to find ways to innovate. Our specific one of our businesses, the Stanley Beer Hall, which I own, has partnered and become a part of the Colorado Restaurant Response, in which we are working with the city of Aurora and private donors to produce meals for food insecure. So those that are hungry in our area has gone up 5-fold in the past 2 months. So we've converted our restaurants that are no longer able to have customers into charitable entities that are distributing food to those that are needy and have food security issues. The other challenge is going to be once we open our doors, and as we are opening our doors to limited capacity, whether it's 25% or 50%, the business model doesn't work. We're trying to find ways that businesses can eat their way to their, but operational costs will go through the roof. We will do temperature checks by doors. People come in. disinfectant and cleaning supplies have gone up 3 to 4-fold. Our labor costs for our common areas is up twice as much, 3 times as much. We have to add security so that we can make sure everyone is maintaining social distancing. So we're looking at a prospect of significantly reduced revenue with significantly increased operational costs. And we'll fight through, but it's certainly daunting.
Thank you. Thank you, Mr. Shaker. So I'm going to reserve my questions after I give the other folks a chance to chime in as well. So Mr. Balderson, you are recognized for 5 minutes.
Thank you, Mr. Chairman. Making sure I was unmuted there. My question is for Mr. Kevlin. Mr. Kevlin, good afternoon, and thank you for being here. Kevlin. As I've examined these issues, one of the things that really sticks out to me are the dozens of efforts across states and some here in Congress to go back and rewrite insurance contracts to force insurers to cover losses like those associated with pandemic risk that were not accounted for when insurers calculated the cost of premiums for business interruption coverage. Helping our small businesses get back on their feet and succeed in the face of this economic crisis is a top priority for me, as it should be for every member of this committee, and I know that it is. I have major concerns with the legal consequences of forcing insurers to rewrite established contracts. I also have concerns that these efforts would hurt the goal to aid small businesses as quickly and efficiently as possible and could ultimately lead to insurers being unable to coverage businesses that need protection from natural disasters, storms, fires, other catastrophes. Would you describe the effect rewriting contracts would have on insurers? That's my first question. And my follow-up to that would be, in your mind, would this work against the goal of helping small businesses as quickly as possible? Thank you.
Thank you, Congressman, for the question. The answer is simply it would take a matter of months to put systemic strain on the insurance industry as a result of retroactive payment of contracts that honestly were never written in that way. We do have an industry surplus, as was pointed out earlier. Through a regulatory process that established about 30 years ago, once the industry gets to about $400 billion in industry surplus, that is a strain in itself. And we ran some economic analysis, and I understand the clerk has distributed some of these charts and analysis to you all, and I encourage you to review them. We did some scenarios based on if you would retroactively fit it to just that 30 to 40% of businesses that bought business interruption. And we also fit it to if you did it to every single business insurance contract out there. The estimates are anywhere from $150 billion a month cost to close to $400 billion a month. And so again, depending on how you look at the scenario, if we look at the best case scenario, let's call it, where you're only applying it to those that bought business interruption insurance, by the time you're getting through the year, you're looking at about a cost of about $485 billion. And clearly getting into where that gaslight comes on in terms of the systemic pressure that is applied to the insurance industry.
Okay, thank you. Mr. Chairman, how much time do I have? I can't see a timer, so I'll make sure I don't go over. I think he's muted. Mr. Chairman, you're muted.
You got 2 minutes, Troy.
All right, thank you. My follow-up then, Mr. Kevlin, is it true that in general, standard business interruption policies are not designed to respond to a complete economic shutdown?
Yes, Congressman, that is true. Standard business interruption policies have language which is 100% clear that excludes or virus and bacteria is the term used in the policy. And these policies are created hand in hand with the regulatory community. They go right into the issue of potential fine print when they regulate the type size. And for this reason, you will have exceptions. And we've seen exceptions and maybe heard of exceptions where people do buy the coverage. It's quite costly. One instance for the All England Club in Wimbledon, they were paying $2 million a month so that it was included. And those claims were paid out. But standard policies simply do exclude it.
Thank you. All right, Mr. Chairman, I will yield back my remaining time. Thank you.
Okay, thank you. The gentleman yields back. Now I recognize Mr. Golden from Maine for 5 minutes. Chair, are you on? You might be muted.
I almost fell victim to the mic there, Mr. Chair. So thanks for reminding me at the beginning there. I was going to ask a number of questions about from Mr. Morrow and Schlotterbeck and Shaker about the nature of coverage denials, but you all pretty much summed it up in your testimony. So I don't have too much to ask of the three of you, but I do thank you for your testimony, and I'm sorry for the situation you find yourself in. I wanted to ask Mr. Kevelgan, I'm sorry if I mispronounced that, and feel free to correct me so I get it right. But you have, I think, described that economically this may not be a situation that insurance companies can afford. Could you say something about the damage to insurance companies that you might expect from this recession and the loss of clients with business closures around the country, not only temporarily, but perhaps on a long-term basis? Are insurance companies concerned about how this is going to impact them as well?
Absolutely. Thank you, Congressman. Absolutely. In addition to ensuring that we want to make sure that we're keeping our employees employed so that we can be there and pay the claims for insurers, there's no doubt that the industry will face challenges, but we would like to think it's facing those head on. Overall, you're going to see claims increase in the likes of workers' compensation, where healthcare workers and first responders in particularly are exposed. We've also seen now a rise in delivery type claims that you'll see when people are driving in different ways and in different areas. You will see revenue decrease in insurance because we have that surplus and we hold funds on hand to pay claims for the long term. It's dedicated to we do a lot. There's a good amount of investment, and it's in fixed investments, and so the rate environment is going to no doubt do that. But we're preparing as well for even more severe natural covered catastrophes, right? We've seen, as I mentioned, an increase in losses in the industry from the 80s has increased 660%. 2017 was a record year. So,
thanks for that. Mr. Hogteling alluded in his testimony, a desire to put something on the table for the committee to think about in regards to a compromise. What did you think about what he offered? And if that's not an acceptable solution, in your opinion, what might you suggest the committee think about as somewhat of a solution here?
Well, as I mentioned earlier in my testimony, the III itself is not a policymaking or a lobbying organization. What we typically do is when there is a type of policy there, we will analyze it and discuss it as a whole. I know that the industry and those trades that do the advocacy work have been heavily engaged with what I would call the policyholder community. And that was reflected in the letter I mentioned about the fund that you could put together in a relief fund, a federally backed relief fund. And so the industry is coming together and collaborating itself. It's trying to collaborate with the policyholder community. I know everybody's looking towards solutions. I believe that those solutions will be presented, and the insurance industry will be part of that.
Thank you very much. I'd leave any time I have left to Mr. Hogteling. If you have anything to add, don't feel like I'm putting you on the spot, though. You're muted.
Thank you. Thank you very much, Congressman. I appreciate it. So I think that there's a question going back to the industry. As I said, we agree that retroactively going back and changing policies is not the answer. But also, it's important to recognize that if we're going to live by the language of the contracts themselves, we should live by the language of the contracts themselves. And there are a lot of policies that do not have virus or pandemic exclusions in them. And the president has recognized this when he spoke to our organization directly and afterwards, that there are policies that do not, many manuscript policies, many do not have the virus or pandemic exclusion that you're talking about in these forms. What the Business Interruption Group wants is we want the contracts honored, the contracts that we're paid for. And that's what we want. Now, we recognize that there's going to be disagreements and there's going to be fights. And that is why we are proposing that on those instances where the insurance industry truly has a clear exclusion that they've put in their policies, that we have a program, for that.
Thank you, Mr. Hogteling. With that, out of fairness to everyone, my time's expired, and back to you, Mr. Chair.
Thank you, Mr. Golden. Gentleman yields back. Now I'd like to recognize Mr. Chabot from Ohio, also the ranking member of the full committee. Mr. Chabot, you're recognized for 5 minutes.
Thank you very much. And having been the former chair of this committee and the ranking member currently, I've been involved in dozens of conference calls with other members across the country on various aspects of the PPP and the idle loan program and a whole range of other things. And the topic of business interruption insurance came up quite often. Mr. Kevin, let me go to you first if I can. Could you expound a little bit upon the concept, the thinking behind insurability of pandemics, and also the fact that the importance of damages being a physical damage and why that is the case, and if you could just expound upon that whole issue.
Absolutely, and thank you, Congressman. As I mentioned earlier, I think probably one of the best illustrations, and that these illustrations are contained as well in that deck that that was distributed. But if you look at a catastrophe in parallel, and one that was severe, where almost every type of insurance was paid out, was 9/11. And so, but in 9/11, what you had, obviously the whole country was impacted in some way, but primarily in 9/11, economically, the areas of New York and Washington, D.C. where it hit most. And so then that's where I mean when, usually you're insuring against a time as well as specific time period as well as specific geographies. And the industry, why the industry's been around for so long is it spreads at risk in ways so that in a way that so you don't want, again, what's happening in a pandemic where everything is striking at the same time. So every single economy in this country, as well as many other countries around the world, are being impacted. And when you have this type of risk, and this type of risk simply wasn't, in a majority way, written into contracts. And so we never prepared for it as an industry because we knew we couldn't cover it. We knew the costs would be too high. In fact, there have been some times where pandemic insurance was offered. There are instances, and I would argue say over the millions of insurance contracts that are in this country, there are many that have inclusions. But again, there are also very many, the standard policy that have to exclude this just because of the magnitude and unpredictability of this. And so that's really, and then the direct physical damage, you're talking about the property part of the policy, that, protecting the property itself. And so that's why you have to look at it's about physical damage, direct physical damage. And that's something that has been established in the legal fields. Our non-resident scholar, Michael Menepes, has made note of this, even in going back to the mad cow disease, where certain claims like this were made. It just legally, the definition of direct physical damage is that anchor of coverage there.
Thank you. And then let me follow up. I happen to have chaired the Constitution Subcommittee of Judiciary for 6 years. So I'd like to ask you, could you talk about modifying an existing contract, the constitutional issues that may be involved in such a measure?
Yeah, and I know and I'm encouraged actually by Mr. Ho-Tang Lang's recognition of this, and he is absolutely going to be a better expert on this than I am. But Article 1 of the Constitution makes it quite clear about going back and retroactively applying things to a contract. And so that therefore, and again, this is a pretty early part of our Constitution that we're talking about that made this quite clear. And so for that reason, any attempt would be unconstitutional.
Thank you. And then finally, I'm almost out of time. Mr. Morrow had raised something that I wanted to maybe give him some relief. We have legislation that's being introduced in a bipartisan manner. Chip Roy and Dean Phillips next week that will address positively the 75-25 rule, also the deductibility of business expenses, and extending the 8-week period. In this bill, it goes 24 weeks. I think that might be modified by the time the Senate gets its hands on it. But I think there's reason to believe that there will be some improvement there, although that's only the House and it has to go through the Senate. But I think there's a lot of support in the Senate as well. PPP was great, but we didn't. There's a lot of things that we couldn't anticipate. We didn't know how the pandemic was going to play out, so it needs to be modified. And I think there's some good news coming down the road on that. And I yield back.
Thank you. The gentleman yields back. Now I'd like to go to Ms. Chu from California. Ms. Chu, you are recognized for 5 minutes.
Thank you so much. And I am pleased to have a constituent of sorts here, Francisco Schlotterbeck, the CEO of Maya Cinemas, that you have your headquarters in my district in Pasadena. So thank you for being here and for sharing the voices of the theater owners. So Mr. Schlotterbeck, on April 1st, the California delegation sent a letter to State Insurance Commissioner Ricardo Lara, urging him to exercise his authority to ensure that insurance companies fully comply with their business interruption policies and give small businesses full and fair consideration for their claims during the COVID-19 pandemic. I'm pleased that soon after, Commissioner Lara directed insurers to fully investigate the claims and provide adequate assistance to policyholders, as well as process decisions in a timely manner. Could you talk to us about your experience working with your insurer during this crisis and whether you feel your business was given fair consideration to submit a claim for coverage? Beyond addressing the exclusions for pandemics, how can this process be improved to make it easier for small businesses to quickly get their claims processed during emergencies?
Sure. I mean, that's the other panelists. I mean, they already expressed in the in this forum. That's been really difficult for us because I mean, when you going after this insurance to try to be covered in all these different aspects, and because nobody's wanting to have a pandemic situation, we try to be pretty sure that we covering everything. I mean, it was came up our attention that this physical loss, physical direct damage was something that is going to trigger. In order to our claim is going to be successful. Unfortunately, we work with our broker. We had several conversations with our broker. We had a conference call with the insurer, right? Our insurer company. They called us. Actually last week. We had a very long conversation, and it's pretty much. The answers that we had is pretty same that the answers that we have in here, listening in this forum, right? Physical damage. The exclusions. Unfortunately, is no civil authority. And etc. Right? So we explain. In our business is small, right? As too many theaters here in the U.S. There's family-owned business. They are in exactly the same situation, and we offer, different options. To explore for the future, right? I know there are, and currently there are two, bills. Working in the process in the legislation that Maya Cinemas, is really, supporting those two bills, right? Because we need something for the long term, right? I don't see that something is going to be fixed today. Right. I don't believe that something is gonna fix maybe next year, trying to changing the contract. But we need to have something strong for the future, right? Because if not, today, we don't know. As I said in my statement, we don't know. When we will be ready for the reopen. And to be honest, the reopening I don't have issues with the reopen. No, I'm not afraid of the reopen. I'm more afraid in regards to the ramp up period, right? Because that ramp up period is going to take maybe 2, 3, 4, 6, 7 months, a year, right? When our customer, they feel, on all the people here in the U.S., they're going to feel comfortable to go back to the theaters, right? And that is the solution, of course, using this business interruption policy in order to have a long-term solution. That is the most. Since we're severe distress. Our theaters are closed for almost 2-3 months. Zero revenues, as I said before, and of course, our partners are studios distribution, right? The studio, Hollywood studios, and they provide films because we don't have we could able to reopen the theaters, but maybe we will not have content, right? So what we're expecting here is to work as an industry to have our studios provide the content, which are the movies, in order to be able to reopen the theaters, right? So again, we support any legislation today. It's already, in the process. I read 2 of them. We support that. And of course, I will happy to have, some answers back from our insurance company that we already talked last week. Because they said, we can submit and resubmit our claim, but for sure we will hear, the same answer, the same no, right, in regards to our claim. Okay, so thank you very much.
Thank you so much. My time has expired and I yield back.
Thank you. The gentlelady yields back. Now I'd like to recognize Mr. Hearn from Oklahoma for 5 minutes.
Thank you, Mr. Chairman. Thank you, and thanks to our witnesses for being here today. The contract clause of the Constitution states that, quote, no state shall pass any bill of attainder, ex post facto law, or law impairing the obligation of contracts, unquote. And while I'm not a constitutional scholar, and I don't know that we have any on this call today, but I've been a small businessman and a person who's owned many small businesses and worked with contracts for over 35 years, sit on insurance boards. I understand about swapping risk for premium. And also understand how when you don't really truly understand a market, how it can be affected by monumental changes that the committee is charged today and what we're talking about. Artificially expanding insurance company liability beyond the plain terms of their policies would completely undermine our insurance markets and do much more harm than good. Many businesses do their work in America due to sturdy foundation on which our contract law rests. In fact, it's one of the qualities that this country has that I would say no other country in the world has. They know that when they sign a contract in America, it will be honored and that breaking it will have repercussions. To undermine this would be completely disastrous. As you may know, the risk of pandemics is typically not included in the price of business interruption insurance policies. Business interruption policies typically require physical loss. This requirement exists beyond this because this policy is written and priced to cover events that cause direct physical damage like fires or weather events. Requiring retroactive expanded coverage of business interruption claims based on COVID-19 would undermine American contract law, pose significant risk to the solvency of insurance companies, and have systematic impacts on the whole industry as a whole. For these reasons, I'm happy that my colleagues at the state level, Oklahoma Insurance Commissioner Glenn Mulready and Oklahoma Attorney General Mike Hunter, have rejected efforts from federal government to rewrite policies and enforce coverages. Mr. Kevlin, can you please elaborate on the impact that this would have if Congress retroactively expanded coverage of BI claims? I know you've talked to it, but could you give us some further thoughts?
In the simplest way, you're looking at just a matter of months before you put systemic strain on the insurance industry through retroactively fitting contracts. Again, our economic analysis, depending on how you look at it, whether you apply it to those, third or 40% of contracts that actually have the business interruption, or if you fit it to all business interruption or business insurance policies, the range is anywhere from $150 million a month in costs to $400 billion in costs. And understanding that premium was never written for. So you're essentially taking premiums away from those Americans that paid for covered catastrophes. And as we're seeing right now, we've got a very active tornado season. Another of our non-resident scholars from Colorado State University, who puts out the hurricane forecast, has predicted an above-average hurricane season. We've got waters right now outside the Florida coast that are in the 90-degree range, which if you go back in history, that looks a lot like the year of Katrina. And I don't mean to apply or make people worried about it, but this is what this industry does. We do disruption. We know and how to cover for those claims that we want to help Americans. And we're actively doing that right now. But I think we also need to step back and ask ourselves, do we want to put systemic strain on another financial services? If we go back just to the financial crisis, I think we've learned our lesson as to what can happen there. And this property casualty industry was able to withstand that crisis much better than most financial services because of the way that we manage our risk, the way that we look to the long term, the way that we hold assets so that we can keep our promises and pay claims. And I think we just need to recognize this is important for our economy, and we want to make sure that we don't destabilize that in any way.
Mr. Kevin, thank you. Mr. Chairman, there's probably been no one on this committee since I got on here over a year ago that's been talked about the bipartisanship this committee has had. However, kind of gravely concerned today. Our witnesses have expressed their concerns, and business people from different points of view. But I got to say, Mr. Hodling represents a very interesting partisan position that he's been a very large donor to the Democrat Party over the years, and he's currently involved in a major lawsuit against the insurance industry. And just today being admonished in the media for his involvement in companies with deep ties to both China and Russia. So I find his testimony very opportunistic at the best, but that I understand that we weren't aware of this when we were invited on the call. But I just want to say, and we've had a lot of testimony today, and I think all of my colleagues here would recognize the fact that we have to have our premiums match the risk. And right now, the risk of a pandemic are not understood. There are no actuarials for those. And so, again, I thank you for the time, Mr. Chairman, and I yield back.
Thank you, Mr. Hearn. The gentleman yields back. And then I will say, as the chairman of this committee, I've appreciated the professionalism and the approach of all the panelists. It's not appropriate for any member of this committee to impugn the integrity of a witness or to claim that there is ulterior motives or conflicts of interest by any of the panelists, which we have not seen in any manner whatsoever during this hearing. And I would push back vehemently on that point, Mr. Hearn. So next we have Mr. Evans from Pennsylvania. Mr. Evans, you are recognized for 5 minutes. Dwight, you might be on mute.
I'm unmuted. Thank you, Mr. Chairman. And I thank you for this hearing. A constituent law firm in Philadelphia sued its insurer after it was forced to shut down on March the 16th by state and local order. Because of the shutdown, the firm was unable to meet with potential clients, get new businesses, or move any litigation forward. In addition, it cannot collect fees from the clients because of the shutdown. The firm's insurance contract include coverage for businesses. I want to take this question to Mr. Hodling. You filed a similar suit in Louisiana. And based on these conditions, do you think an insurance company should provide coverage? Please explain.
Yes, I think they should. I think they should live their contracts, and I do find it. I do find the ad hominem attack against me and my integrity to be very partisan in and of itself. We have an industry here, an insurance industry, which has a conflict of interest with businesses in America that have bought business interruption coverage. And I appreciate the pointing out about democratic support of myself, but I've also been a very big supporter of the Republican Party. So I'm completely nonpartisan. The President of the United States gave an audience to our organization because it understood that businesses in America, businesses in every one of the congressman's towns, and in every congressman here in America are facing bankruptcy. Okay, if business interruption policies are not paid, then the constituency of every town in America is going down. Now, the situation is that this is a conflict of interest with the insurance industry. There is no question I am on the side of American businesses, and the insurance industry is on the opposite side of this. Okay, there isn't any question about that. And there also is not any question about the fact that we don't want to change policies, but it would be absolutely improper. And the congressman brought up the fact that as an American businessman, you want to live by your word. You want to make sure your word is your bond. And when you take policy premiums from businesses for sometimes decades, for sometimes more than 4 decades, and you sell policies of insurance, then you should live by the words of those contracts. And if you look at the words of those contracts, okay, if you look at the words of those contracts, it states in extended civil authority coverage that if there is a dangerous property condition in the area, and that is the reason for the civil authority shutdown, and that dangerous property condition is a covered cause of loss under the policy, there is insurance coverage for that civil authority coverage. Absolutely. And the idea that has been planted, okay, that had been planted around by been pushed out by agents, by brokers who have a conflict of interest here, that pushing out to policyholders that a property condition, that is a contamination, that can be deadly to my parents, is not considered to be a property loss, is not supported in the fact, it's not supported by the law. Now, if the insurance industry wanted to exclude pandemics, as President Trump said, they could have done so. But as the president said, the word pandemic does not appear. I've looked at over more than 500 policies in the last 8 weeks. I have found 2 where that word appears, okay? So there's going to be fights about whether or not viruses in different parts of the policy and how much that constricts the policy itself. But we should live by the words of what we do as Americans. And if we do not do that, then businesses across the country is going to fail. The idea that this is some type of partisan issue is not. It is American businesses that are at stake, and it's the employees of those businesses that are at stake here. And if we can't, the insurance contracts need to work. The device of insurance needs to work. If the device of insurance needs to work, it doesn't just affect the insurance industry. It affects every business in America. If they pay for coverage and the words of that contract show that there's coverage for civil authority shutdowns and other parts of that policy, then the insurance companies should pay that. And what's happened here is we're conflating contracts that have exclusions with contracts that do not. The insurance industry doesn't want to pay the contracts no matter what they say. And this is a problem. I think that the sanctity of the words of the contract should matter as much as the insurance industry. The problem is that the insurance industry is intentionally misrepresenting the fact that all of these policies have exclusions. And
I thank you, Solon. I thank you, Mr. Chairman, for this opportunity and for this hearing. I think this discussion is long overdue. Thank you.
Thank you, Mr. Evan. Gentleman yields back. And before we recognize the next member, I'm going to just give a reminder to all the members on the line. This is a very challenging time, a challenging issue. We are in the midst of a crisis. Obviously, emotions are running high. There's a lot at stake here. But every single one of the panelists have been professional, are giving their time, their talents, their experience, and they have provided perspectives on this very complicated issue. And that's the point of these forums, actually, to have a discussion about tough issues. And I want to remind the members that we will not tolerate any member impugning the integrity of a panelist or accusing them of some kind of ulterior motive other than just advocating for their position on this issue. So with that reminder, I would recognize Mr. Hagedorn from Minnesota for 5 minutes. Jim, thanks for joining us. You have 5 minutes.
Chairman, thanks for holding this hearing. I appreciate you and the ranking member, Mr. Balderson, my good friend, for putting this on. I actually would like to associate myself with my friend, Mr. Hearn's comments. I thought he brought up some good comments, and at the end of this, I'd be glad to yield him some more time if he's still on the line and would like to talk. But early on in this whole process, when this pandemic broke out, there was a letter circulated. I actually signed on to it that said if these things were included in insurance policies, that they should be paid. But my understanding was there were very, very, very few policies across the country that would cover something like this. And it makes it's common sense when you think about it. An insurance company is usually out to make sure, like Chairman Chabot, former Chairman Chabot said, a house burns down, you have a hurricane in a region or area, a tornado, but they're not going to go out and cover the entire country. Not every single business in the entire country. Nobody thinks of that. Now, since this has all gone down, our committee, the members of Congress, our taxpayers have stepped up with the Paycheck Protection Program. We put out about almost $700 billion for small businesses. In many ways, for 2 or 3 months, have served as insurance companies to make sure they can continue operations, retain their employees. Mr. Pappas, a Democratic member from New Hampshire, and I were encouraging the employee retention tax credit. And now we have a bill, Mr. Pappas and I, along with Congresswoman Murphy, that would allow people to use both the employee retention tax credit and the PPP program. So there are lots of things going out there to help our small businesses and to help people maintain operations, stay in business, and to get back to work. And I think, as Congressman Balderson brought up, reopening America is important. Getting people back to work, as I say, flattening the unemployment curve, that can be as important as anything. And I guess down the road, if someone wants to answer this question, how much is this proposed program that we've been talking about today going to cost the taxpayers? Nobody's brought up a real number as to what we're looking for. But with that, if Mr. Hearn is still with us and he'd like to reclaim some of my time here for a minute or two, that's fine. If he doesn't, then I'm happy to yield back my time, but I give him that opportunity.
Okay, hearing nothing. Mr. Hagedorn, are you yielding back?
Back, thank you.
Okay. Next up, we have Mr. Schneider from Illinois. Mr. Schneider, you're recognized for 5 minutes.
Great, thank you, Chairman Crow, and thank you for organizing this important forum. As always, this committee's leadership and staff has worked incredibly hard, and the critical work you guys are doing during these uncertain times is truly making a difference. I also want to welcome all of our witnesses, and we may not all agree, but I think it's important that we treat each other with due respect and hear different perspectives. So I thank you for sharing your insights and perspectives. One of the reasons I like working on this committee, I've always liked being on this committee since I first came to Congress. I started before Congress. I was a small business owner and entrepreneur. One of those experiences was in the insurance industry, albeit in the life insurance industry. But I have a deep appreciation of the dynamics at play, especially when it comes to underwriting and managing risk. I understand that insurance is a way to share risk across policyholders, across the population, and distribute the costs of that risk. And I also understand that's why it makes it so difficult when you think about insuring against a global pandemic. It's impossible to distribute that risk because it affects all of us. But there are things that I think we can do. So whether explicitly or implicitly, most business interruption insurance thereby excludes pandemics as triggering events. That said, I totally sympathize with the pains and struggles that our witnesses shared today in their own businesses and the businesses across my district and across our entire nation. These businesses are struggling, and we need to find ways with the federal government, with the industry, to help these businesses. First, to manage the immediate blow of the shutdown, the stay-at-home orders, but then also to navigate through this crisis, ultimately to recovery. And that's what I hope we can find a way to do, Republicans and Democrats, bipartisan way to do that. And I think that's why last week passing the HEROES Act was a step in that direction. I think a useful guide for the COVID era is looking at the successful public-private model of what we saw with TRIA, the Terrorism Risk Insurance Act. The impact of the attacks from September 11th, as was earlier noted, were unprecedented and represented an externality that was largely unaccounted for, both in scope and impact. Within the existing insurance policies within our economy, businesses were faced with a profound and direct impact on their financial health, and insurance companies, even those that had terrorism risk insurance in their policies, were overwhelmed. TRIA provides a federal backstop on insurance policies, allowing insurers partial reimbursement for qualifying events. And I think this is a good model for us to pursue as we think about pandemic insurance, mitigating that risk. My first question, therefore, is to Mr. Kevlin. The National Association of Insurance Commissioners estimates that applying current business interruption insurance policies to the pandemic could cost the sector as much as $431 billion per month. If it were to retroactively apply business interruption, if we were to apply it to the pandemic, what impact would it have on the sector to respond to other claims beyond the pandemic? I know you've touched on this broadly, but if you be specific, and would it have an impact on the industry solvency?
Thank you for the question, Congressman, and appreciate the opportunity. And again, going back, it would absolutely, any retroactive looking at these contracts would absolutely put systemic strain on the industry. In particular, again, referring to the deck that I distributed, there's one slide in particular that visually shows, and it's slide number 9, actually.
I saw it.
That virtually every single line of insurance will be impacted in some way, shape, or form from retroactivity. And it's important to note, these premiums were paid to be so that claims could be made on covered catastrophes. I know there's been some discussion about whether or not business insurance intended to cover a pandemic. I tend to rely, and you actually just cited the National Association of Insurance Commissioners, and specifically, and we actually, at III, we've established this COVID issue has taken on a life of its own, and so we've established a micro site that we're calling the Future of American Insurance and Reinsurance. It's at fairinsure.org, and you can see quotes from commissioners, the NAIC, the National Association of Commissioners, that obviously are saying, not typically well suited for global pandemic where virtually every policyholder suffers, and I think you already made that point. The Georgia Insurance Commissioner agrees on this, saying most policies, West Virginia. And in fact, in terms of looking at whether or not there are many cases, I think that needs some context. But we even have an example where the Washington State Insurance Commissioner went out and reviewed and found through the entire state that there were 2 policies total that included pandemic. And both of those policies were paid. And that particular insurer actually had to make that write down in their earnings as a result, because they were paying the claims, and it was a total of about $3 billion.
Great, thank you. And just to say with Mr. Kevlin, there's been discussions in Congress and the Treasury about expanding TRIA to cover
Mr.
events
Snyder,
like...
your time has expired, so we'll have to loop back to you if you still have remaining questions.
Okay, thank you.
Okay, thank you. And next, I think we have Mr. Stauber from Minnesota. Mr. Stauber, thank you for joining us. You are recognized for 5 minutes.
Thank you, Mr. Chair. Small businesses are hurting. That's the bottom line. And I think we can all agree that we need to find a way to protect small businesses from this kind of financial travesty in the future. This is certainly a complicated issue, and we must make sure that any policy proposal that arises out of this is well thought out as it is well intended. We also must ensure that the government is not picking winners and losers, because by writing policy that favors one industry that may be well-intentioned, we can impose harm on another. So with that in mind, here are my thoughts. Creating a program like TRIA for a pandemic seems like it might have unintended consequences. Because such a program is capped, it may seem to incentivize folks to shut down as quickly as possible, even before it was truly demanded by government guidelines, because everyone would want a shot at the capped pot of money first. So my question is to Mr. Kevlin. Could you speak to my comments a little more? And then how do you think we could avoid such a problem in any sort of public or private programs together? Mr. Kevlin?
Yes, Congressman, thank you very much for the question. And what I would first say is we need to recognize that this is a different situation. You heard me earlier, hopefully say, when we look at 9/11, we're looking still at limiting time and geography in terms of the economic impact. When we're looking at this pandemic, we're looking at every single economy at play. And so I think it's important, and again, we're not part of the direct policymaking process, but as you do that, I think we need to start at a place where understanding this is different. All of us here doing a WebEx hearing, all of us here from every part of the United States recognizes and illustrates just the magnitude that we're dealing with this. And I think that needs to be the first recognition. And then also recognizing that the enormity of it and how we exchange the public-private benefit, we need to pay attention to scaling. and how that works, because all of our industries want to get up and running. I mentioned how our industry is keeping the economy going, paying claims. We're entering into active hurricane. So there is an enormity of every single American being impacted here in some way, and we've got to recognize that pandemics are different. And so I would say that we need to recognize that before applying a perhaps previous policy solution in this. But again, I think those discussions will be had. I do want to also recognize that a couple of the trade insurance advocacy organizations today announced the business continuity protection program as well as a potential solution. And I think coming together in discussions like this, we'll get there.
And I think, and I appreciate that response. And I think, Mr. Chair, to my colleagues, I mean, we understand that we know this has to be a bipartisan issue, has to have the information collected. So if there is a program we put together, I'm very confident that we can do that. And as you said, put party labels aside and really do what we think is necessary. So I really believe there could be a win-win, but there's got to be some great dialogue. And I appreciate this opportunity, and I appreciate your comments, Mr. Kelvin. And I yield back, Mr. Chair.
Thank you, Mr. Stauber. Appreciate that, and I think we certainly share the same overarching goal here in trying to find some path forward and solution. Now, looking at my list, bear with me for one moment, folks. I think Mr. Burchett from Tennessee is next. Mr. Burchett, you are recognized for 5 minutes. Are you with us, Tim? Yeah,
Can you hear me?
I might have to unmute.
Can you hear me?
I can hear you now. You're on.
All right. Can you see me? I'm wearing a coat and tie. I just wanted y'all to know that. I'm not doing it. For you, Mr. Chairman, I had dinner or lunch with a constituent and a couple of folks. So
I'm honored, Tim. You wear a coat and tie for me. Thank you.
Yeah. Usually I'm in jeans and socks about this time. I've been working in the yard and I have to take my boots off to come back in. But no, hey, thank y'all so much. I had all my questions pretty much have been asked. I'm just so the committee knows I was actually a licensed insurance agent. Some of you others have mentioned they were too. But I wonder, maybe our distinguished group that's gathered, I'm wondering what the effect could be. We're getting ready to come into hurricane season. There's going to be fires. There's going to be other disasters that we just, you can't predict. And I'm glad that we all are in agreement that we can't go retroactive on this issue because it is unconstitutional. And I think that would just bankrupt our insurance agents industry as we know it. And I'm wondering though, if we do dampen our feet in the retroactive pool, what's going to happen when we come across some of these other catastrophes that are happening in our, that will happen, that we know are going to happen. And will the industry even survive if we do that? And also, Mr. Chairman, if you could, I know there was mention of a program, a hybrid type program where if they did go back and retroactively cover these folks under virus, even if it's not in their policy, if you could get us a fiscal note on that when that comes out. I don't know the process on that. When I was with the state of when I was in the legislature in Tennessee, the fiscal note always traveled with the bill and we knew exactly what it was going to cost. So if you could provide that for us, I would appreciate it. But if the panel would answer that question, I would appreciate it.
Thank you, Mr. Burchett. Who on anyone on the panel? Chris, you're unmuted. Do you want to, Mr. Morrow, do you want to take a cut at that?
No, I was just going to say that I unfortunately have to go. I was told that this would be an hour to an hour and a half, and I made some other obligations. I just wanted to thank you all for working on this issue. And thanks for your good work and good luck.
Thank you, Mr. Morrow. Appreciate your time.
Thank you, brother.
Best of luck to you as well as you address this challenge.
I can address Congressman Burchett's question on the program.
Yeah, Mr. Hodling, go ahead.
Yes, so Congressman Burchett, thank you for asking that particular question. The program that we propose would be an optional one for the insurance industry, not something that forces people to do anything. It's an optional one. If they have a virus exclusion in their policy, The concept is they would be able to opt into a program, be able to make that payment and receive reimbursement similar to the NFIP type of program. That is the proposal, and it is not something that is suggesting of retroactively looking at it. I too am very concerned about solvency. I'm very concerned about the solvency. I want the insurance industry to work. And what I see is that the insurance industry is now, it is going to have, there are going to be billions and billions and billions of dollars pitting businesses against insurance companies for the next 3 to 5 years. I've been involved in almost every major insurance disaster in the last 15 years. I have litigated over the ashes of people's businesses and their lives. This is what will happen. The insurance industry is going to win some of these that at a very high cost. It's also going to lose some of these because there are policies, many of these manuscript policies that provide coverage for contamination of property and property loss, and that triggers the civil authority coverage without question. Now, what the lines are getting blurred here is because the industry does not want to pay does not want to contribute at all. It wants to say, look, watch out for solvency. There is the solvency, however, of the American businesses. This is also a big concern and should be a concern to everyone that there are businesses that took part of their profit. This business interruption coverage is very expensive. Civil authority extension coverage is very extensive. And in absence of a pandemic or a virus exclusion, civil authority coverage applies. Why? Because COVID-19 sticks on surfaces, it causes a dangerous property condition. And that is the reason, part of the reason for the civil authority. And so there's going to be some policies that apply, and there may be some policies that not. What our program is to say.
Okay, hey, hold on a second.
Sure.
I'd like for Mr. Kevlin to get the answer. I only have 1 minute left, so I didn't mean to run on so much. If you could do that, let me do that.
Thank you, Congressman. The 2 points that I would make very quickly and picking up on the discussion here, there is a cost. And we are concerned about the cost this is playing as we're seeing a distraction from an enormous amount of attention being paid to litigation. Whereas, these types of forums and what we're having here, when we recognize the federal government is truly the only entity that can provide the right type of relief, this is where we feel is important for insurance to have a discussion and to come forward. When you put these costs into the litigation system, this is why we have terms these days called social inflation. It adds significant costs to our economy that simply don't need to be there. And we want to avoid those small businesses from being distracted, thinking there's a legal opportunity where this has precedent. And we saw this again in mad cow disease. We saw this about the direct physical damage in these. I'm not directly a lawyer, but I can tell you that that this has played out before, and it played out again at a significant cost.
And thank you, Mr. Kevlin. Time has expired, and Mr. Burchett, thank you. Your time has expired.
Thank you, Mr. Chairman. I don't know what to think about a chairman who jumps out of a perfectly good airplane, though. I'm not sure that, but I appreciate you serving our country, brother, and thank you for your
Well, the invitation is always welcome, Tim. You can join me anytime.
Yeah, I get dizzy at the top of a ladder, brother. That ain't happening. Thank you.
Thank you. The gentleman yields back. Dr. Joyce from Pennsylvania, you are recognized for 5 minutes.
Thank you, Chairman Crow. We all recognize that we're in uncharted territory here dealing with the fallout from COVID-19 virus. However, I would caution those on this committee about the law of unintended consequences. In hearing about efforts to change the terms of insurance contracts, force insurers to cover risks like those associated with losses related to a pandemic virus, I can't help but think of my time in the medical profession and as someone with experience working with health insurers on a daily basis. Now, I know health insurance is a bit different from property and casualty insurance, but at the end of the day, the products are still based on the same underlying premise. Insurers take in a premium that is actuarially based on covering certain risks, and the insurer pays out claims to those that purchase such coverage. And in this vein, I feel that insurers should cover claims, including those whose coverage existed in business interruption insurance contracts. But forcing insurers to cover a risk where clear exclusions are in place would, in my mind, threaten not only the entire insurance industry, but all insurance policyholders. And at the end of the day, this would lead to premium increases for everyone. This would lead me to a serious concern. And in trying to do a short-term benefit here, it would lead to a longer-term significant harm of substantially higher premiums going forward. This is especially concerning as businesses are already severely struggling with cash flow as we try to reopen our economy. Mr. Kevelin, how would you address this and how would you respond to this, please?
Thank you, Congressman. I think what we're seeing now, and I mentioned some solutions that are being presented early a few weeks ago in the terms of a COVID relief fund, and then now with the business continuity protection program, ways that the industry is coming forward with the policyholder community to have discussions in forums like this where we can figure out how do we present forward-looking solutions, and that's really critical and key. And how do we do so with the backing of the federal government? And I am encouraged. We see the insurance industry and again the policyholder industry having these discussions and working towards solutions, because again, going back to the costs of litigation are extraordinary. And I would venture to say that's not where the solutions exist. The solutions exist with the federal government in forums like this, where we can have the right dialogues and make sure that we get the solutions that Americans need.
Mr. Kevelin, you mentioned the cost of litigation. Wouldn't you foresee this increasing insurance costs in the long run?
Well, there is absolutely a cost that comes with this, and we're talking about. And by the way, the costs, the legal costs, are not taken out of the surplus. These are taken out of the operational costs of the industry. And anytime you have that type of strain, you're raising the cost of risk overall, and that does come back to increase insurance rates, and we will no doubt see that as a result. And so that's where we get this term social inflation. There's an impact on the customer that needs to be considered. And there's a distraction as well for this. Small businesses do not need to be distracted by trying to present legal arguments as much as they should be distracted by going and trying to present the solutions or obtain the solutions that the federal government has given already and will have more to come.
I think that I commend the chairman for holding this. We all recognize that small businesses are truly the backbone of America. And in what we faced in COVID-19, we're seeing that small businesses are the heart of America. Thank you. I thank all the witnesses for testifying today, and I yield the remainder of my time.
Thank you, Dr. Joyce. Appreciate your comments and questions. The gentleman yields back. I now recognize Mr. Bishop from North Carolina. Mr. Bishop, are you still with us?
I am. Can you hear me and see me?
We can, yes. Thank you. You are recognized for 5 minutes.
Thank you, Mr. Chairman. And thank you, the panelists, all of you. It's a very important discussion. Mr. Huffling, if I could sort of seek a little clarity from you. You said that insurance companies should live by the words of their contracts, and that means that if the language of the policy covers a pandemic or virus that they should cover, they should pay. And if it doesn't, they shouldn't, right? And you're muted, sir.
Congressman, that's exactly right. They should live by the words of the contract. The problem is that the industry, and it's very clear today, the industry has pushed out this message that all policies do not include civil.
Well, let me just reclaim my time, Mr. Huffling. So I appreciate that. I mean, there may be disputes over that, and they usually get resolved in court. And I understood you're saying that there's cost to be incurred and going through all that litigation. So I understand that. Congress, though, literally can't change that result or the contract language that leads to it, though. You've made that point as well. Fair?
I agree.
Okay. So let me seek clarity on what your proposal is. Insurers get to opt in to some system And I think with the little one-page document I saw, says if they opt in, they still have to pay the business interruption claims that their policies cover. Is that correct?
Well, yes. What we're not trying to do is to give a windfall to any particular industry. If you took policy premiums,
but they also let me reclaim my time. Then I just want to get But if they opt in though, then they can also pay business interruption claims for which they don't have coverage liability and get reimbursed. Is that right?
The argument is yes. If they opt in, it's an optional program. They don't have to opt in. They can go to court. They can take their money and they can pay their defense lawyers and they can fight it. But there are some policies that clearly provide coverage that they're not paying. And then there's
what you're saying. I think what your proposal then is, sir, is it not that if an insurance company is uncertain about whether it has a good exclusion or not, then it's going to opt in and it's going to transfer its risk to the American taxpayer by just voluntarily seeing those payments or those claims paid for, and then the taxpayers pay for it, or more correctly, a future generation's taxpayers, because we don't have any money, we just got debt, right?
Well, no, actually, I don't think so, because what you're going to have here is right now what the industry is proposing, what the insurance industry is proposing, is just proposing another pot of money to pay for the employees that are on unemployment lines. Okay, another taxpayer pot of money. What we're suggesting is no. In this situation, that's not fair for the taxpayers to pay for things that policy premiums have been paid for. If there are businesses that took out their profits for a year.
I don't think we're in dispute about, Mr. Huffling, I don't think we're in dispute about the policies, about the paying policies that they're exposed on. We've already said that I stipulate, everybody does, that they should. The question is who pays for coverage that they don't have a contractual obligation on. And you're saying that's going to be passed to the government. The government's going to reimburse them. And the cost of that would have to be borne by taxpayers.
Well, there's some policies, there's a big dispute on the language. The language is not clear. The language does not say in most policies, in 99.99% of policies, it does not use the word pandemic. It does not particularly exclude pandemics, but it has words in there where there can be a legitimate dispute, Congressman. And the argument is if we do nothing, if Congress does nothing on this issue, then the subset of ones where they may be a dispute, it could go either way. There is going to be litigation that's going to pit American businesses against insurance companies because there's a lot of American businesses, Congressman, and others that believe that they have coverage and there is a dispute. Now,
Thanks, Mr. Huffling. Hang on, Mr. Huffling, just reclaiming my time. Appreciate your point. Just quickly to Mr. Kevlin. Under the opt-in idea that Mr. Huffling is describing, if someone has a clear exclusion of coverage, why would an insurance company opt into such a system?
Well, thank you, Congressman. I think what this comes back to is the notion that global pandemics are uninsurable. And so where my question is why is this an insurance issue? And why aren't we, again, looking at this as the pandemic is, which is affecting every single industry all at the same time? This industry is designed to pay and is paying its covered claims right now. It's been very clear that language in contracts in terms of the virus and bacteria exclusion is located on what's called the declarations page. That language is worked out hand in hand with the regulatory community. So I think you have a whole thought. I want to make sure you have your time.
Yeah, I'd love to be able to converse with both of you more, but my time's expired. The chairman's been indulgent. Thank you, sir. I yield back.
Thank you, Mr. Bishop. Appreciate your questions and for joining us today. So I believe we have gone through all of the members here. Let me check with staff. Yes. Okay. So we've gone through all the members, and out of respect for the panelists, thank you for bearing with us. We went a little bit over time, but wanted to make sure we got through all the members and everyone had a chance to voice their questions and concerns. So let me begin by thanking first and foremost the panelists for joining us, particularly the business owners and the heads of the businesses for taking time away. You all are on the front lines of trying to make sure you keep Americans employed, you keep our small businesses moving. You're doing incredible work. we're working hard to stand by you and give you the aid that you need. So thank you very much for joining us. Thank you to all the members for joining and for participating in what is a spirited discussion. These are hard issues. These are hard times. And obviously, that, when you're in a situation like that, you have a spirited discussion. But we heard a variety of perspectives and thoughts and views, which was the point of the forum, to make sure that we heard things and that everyone had a chance to voice their questions and concerns. So I think it was successful in that sense for sure. I also want to thank the staff of the Small Business Committee for adapting and putting together this forum and this platform. I've been working really hard the last 10 weeks to respond to a very unprecedented environment. And not only are they dealing with entirely new programs and PPP and EIDL and everything like that, but also putting together these forums. So thank you to the staff as well. So just to finalize and close up, I think one of the risks when you're in an environment like this and when stakes are very high, there's a risk of always falling into an all or nothing mentality. This idea that either you do everything or you do nothing. But that is normally not where the path forward exists. There's usually a path forward somewhere where you can come together and you can compromise. I didn't hear any of the panelists today talk about rewriting contracts and covering people back in time that weren't covered or don't even have insurance. I didn't hear that perspective voiced by the panelists, and I am not hearing that perspective voiced by very many people, frankly, around the country. What the focus of this was about was that subset of businesses that actually have business interruption insurance, the third or so of businesses that have paid substantial amount of money to buy this coverage. And then you have another subset, you have exclusions for specifically carve-outs for pandemics and viruses, which does seem to indicate to me that if there are exclusions articulated in certain policies, that this is actually something that has been on the radar of insurance, and this is something that they have thought about and have excluded for certain policies and in certain industries. So we have to address that component as well. And then the fact that the industry has, in fact, taken out insurance themselves, reinsurance on their reserve, and has done so recognizing that there could be a large event that would use up all of their cash reserves, like we are anticipating. That, in fact, is what reinsurance is about. So all of those things said, I do look forward to working with the members of this committee on both sides of the aisle to try to figure out if there's a path forward that everybody can live with, that keeps industries and businesses solvent, that honors the terms of contracts and provides aid to businesses that so desperately need it. My door is always open. My phone is always on to have those conversations. So thank you all for joining us during this forum. Be safe and be healthy and have a good rest of your week.